Hey everybody, how is it going? Let's make sure the audio's okay. I think we're okay. Let's turn that off. Nice to see everybody. It is Saturday today. Look at that. Saturday, November 22nd, 2025 years. And yes, Saturday stream today. Or this evening, welcome. It is, I don't know, 30 degrees here in Orlando. It's hot. It's hot. We had a bit of a cold spell for 4 or 5 days. And I was thinking the winter is here, and then it went back to being warmer than a cup of tea. Warmer than a warm cup of tea. Now it's hot again, so. Anyway, welcome. I hope you're having a great week. Haven't been on for a couple of weeks. Apologies. I mean, to be honest with you, I'm going to be honest. I just haven't really had much motivation to live stream. The peer-to-peer lending world has been relatively quiet, and I just motivation sometimes isn't there. Hey, what am I going to do? But here today, anyways. Anyway, let's should we have a little chat about what we're going to talk about? Let me look at my notes here. We're going to look at a little bit of peer-to-peer lending news. Can you believe it's almost December? That is crazy. 2025 has gone by just so fast. I just, as you get older, things change, right? You start to do things like get up in the middle of the night to go to the toilet. That never used to happen. I didn't used to snore, and all of a sudden I find myself lightly snoring, and apparently it's because I'm getting older. So 2025 has gone by so fast. 2026 is going to be here. Strange things I'm sure will happen in 2026. Maybe the interest rates will get cut. Maybe inflation will go down. I don't think so. I think inflation is going to go up. I think interest rates are going to go down. Inflation is going to go back up. We'll see. But yeah, we're going to talk. We're going to talk about assets capital. We're going to talk about funding secure. We're going to talk about SOMO. We're going to take a look at Crowd Property's new user interface on their website. Oh my God, look at my hair. If you can do me a favor, hit the thumbs up on this on the YouTube. Takes a second. That helps out a lot. So we'll talk about the stock market too. It's been a rocky couple of weeks. The Trading 212 portfolio is still alive. Whether it is doing well, you'll have to stay tuned to see. I'll show you how it's doing. A couple of messages from the mailbag that we will go through. Yeah, so anyway, should we get right into it? I didn't expect there was going to be that many people here on a Saturday evening, but I thought maybe, because it's dark and cold, maybe you would want to turn on your computer or your phone and just talk about peer-to-peer lending and investing and listen and chat away with your favorite financial thing community. Good evening, Invest22, tuning in from a place where he is not looking at his Bitcoin wallet. Dave Dawson, we'll talk about Bitcoin, of course. How can we ignore that? How can we ignore capitulation? How can we ignore the chance of opportunity, the way I see it? Dave Dawson is here. Hello, Paul Bagworth. Hello, Peter Vince. It's been a chilly week in Leatherhead. Paul says, do we usually have our numbers after our names, or is it just me? I've never seen that before. Yeah, I don't know why. Maybe that must be a new YouTube thing, showing your username. Dave Dawson 9099. So yeah, sometimes they update the websites and they change. Anyway, should we get right into it? Shall we? 10 people who are watching live. 10 people out of 6 billion people on planet Earth. Oh, by the way, you can't see her right now, but it's Harley's 9th birthday today. November 22nd. 9 years ago, that little pup was brought into this world. And then February 2017. So she was born in 2016. 2017 was when I was introduced to her. And she crawled up onto my shoulder and said, "You got to take me home with you." I was never planning on that, but 9 years later, Holly is 9. So happy birthday to her. I should get her for a second, shouldn't I? Hold on. Say hi to everybody on your 9th birthday. Oh, yes. She is, look at that, 9 years young. Can barely see her. 9 years young today. She's getting lots of treat, lots of love. She still runs around like a little puppy. She is not a big fan of the camera. Anytime I try to point a camera at her to take a photo, she goes, yeah. It's funny how dogs are instinctual like that. They know. Even though they don't know what cameras are, they know that they don't like them. So, very interesting. Let's get right into the news. It's really been a very quiet. I mean, I was looking through the alternative credit investor website news, and there's just barely anything about peer-to-peer lending. So, state of the market's just hibernating. It's quiet. But let's talk about what is there. Appetite for peer-to-peer lending rises across European investors, according to RoboCash and their nifty little services and surveys that they do. European investors are ready to increase their allocations to alternatives, with as much as a quarter of their portfolios directed towards peer-to-peer lending, according to a recent survey by RoboCash. The Croatian-based investment platform said that a third of European investors view peer-to-peer lending as an attractive addition to their portfolios, while another third remain cautious due to security concerns. Almost half the respondents indicated that allocating from 20 to 25% of a portfolio to peer-to-peer lending can offer a balanced risk-reward profile. The survey found that transparency and past experience are becoming key priorities for investors when selecting peer-to-peer platforms. High probability was also cited as an important factor when choosing a platform, with many investors reporting profits from peer-to-peer lending within the first 3 months. For example, rental properties may take 1 or 2 years to become profitable after purchase, while private equity investments can take 5 to 10 years to deliver significant gains, the experts in RoboCash's survey said. Peer-to-peer lending maintains a strong position in the fixed income market, offering a nominal annual return of 11 to 12%. Wow. Interesting things in this article. I do have to shoot down some of the things in here. First of all, these RoboCash surveys are very biased, I believe, because a lot of people that invest through RoboCash are already peer-to-peer lenders, so they understand it. But I think if you go to the average person on the street and said, "What do you think about peer-to-peer lending?" most of them are just going to say, "Huh? What the hell is that?" Because they're just not going to know what it is. But a couple of other interesting things in this article which struck me. The thing about rental properties may take 1 or 2 years to become profitable after purchase. I mean, I don't really understand how they can make a statement like that. I think it depends on how much you pay for the property. It could take a very short period of time to become profitable. If you're cash flowing and you're making, £100 over what your expenses are, then that becomes a profitable endeavor. So I'm not really sure about 1 to 2 years to become profitable after purchase. And private equity investments can take 5 to 10 years to deliver significant gains. Again, what is private equity investments? It's kind of an odd article, but it is nice, honestly, to see some positive news. We see a lot of kind of negative sentiment, I think, sometimes in peer-to-peer lending. So it is nice to see something positive, I believe. Yeah? Don't you think so? I think so. Let's see. Shall I turn my... There we go. Turn my camera on. Publish that. Okay. Moving on. Is that too big? Shall I reduce me? Should I reduce me? I should reduce me. Hang on one second. Let me fix this. There we go. Okay. That's better. My face is too big. I don't want to see that. You don't want to see that. Moving along. Here we go. Alternative Credit Awards for 2025. This is where the alternative credit investor gives out awards to the companies they think are doing a good job and the other people think are doing a good job. They had a awards. Did they do a banquet this year? Yeah, they did. November the 19th at the Royal Lancaster, London. I don't even know what that is. Should we Google it? Should we Google the Royal Lancaster? Wow, look at that. Five-star hotel. Very swanky. Look at that room. Gorgeous. Right next to Hyde Park. Nice location. Yeah, so they had their awards. And let's see who was on there. What's very interesting is you're just not going to see a lot of peer-to-peer lending companies on here because there isn't that many categories. But there are a few. So let's go ahead and note them. So we can see who they think is doing a good job. UK Property Development Lender of the Year, Relendex. UK Bridging Lender of the Year, Cufflink. Peer-to-peer Lender of the Year, Folk to Folk. I think they've won that before, right? IFISA Provider, Easy Money. Anybody else on this list? I just see a lot of... there's a ton of awards. My God, they used to just have a few, and now look at them all. Fund Manager of the Year. Look at that. Blackstone. That sounds like an evil movie, doesn't it? Blackstone. Direct Deal Lender of the Year. Large Cap. Blackstone. CoreWeave. Interesting. So, usual suspects on this list. Relendex, Cufflink, Folk to Folk, and Easy Money. Very disappointed that our friends over at Cufflink don't make this list. I think that's a complete miss on their part. I'm not even sure if Cufflink should be on this list, judging by some of the things that have happened this year. Folk to Folk, I could agree with, has been relatively good. Easy Money, relatively good. Relendex, don't know too much about them myself, but heard positive things. Should Cufflink be on that list? You tell me what you think. I don't know. I think there's a lot of negative sentiment towards Cufflink at the moment, but we'll see. So that's interesting. And our friend, Mr. Chimpo Naughty, also, he put in July the list of who was on those lists of the category lists. Who was being voted on? We had Easy Money, Relendex. Kind of the same people. Yeah, the Money Platform was on there. Folk to Folk, Cufflink, Shojin was on the IFISA Provider. But again, I think LoanPad should definitely be on that list. I think that's a bit of a mess. Disappointed, I'd say. But maybe that's because the alternative credit list is just kind of out of touch with what is really going on in the market. Could be that, right? But maybe that's who they think is, who the people voting on it think are doing the good job. I would say one thing about that. I think if you're not loaning money through these platforms, you probably shouldn't have a vote. I think you would have to provide proof of that. That would be the smart thing to do, right? To have people that are actually using their own money to invest voting on this. They should just let the investors vote. I think that'd be cool. I might send that in as a suggestion. Because I don't remember how they come up with these winners. I think maybe it's a percentage weight of certain people get to place their votes. Other people within the alternative credit investor network gets to put their vote into, but I never get a vote. They never ask me. But I think it'd be I think you should be able to vote on the ones that you actually invest through so you have real life experience. Because if you're not investing through these companies, you really don't know what they're like. Like, that's why I really don't make statements about Relendex, because I don't invest through there. I never have. I can make sort of a blanket statement of what my feelings are about a company, but I think if I don't invest through them, it's kind of hard to say, yeah, I've had a good or bad experience. They get my vote. But hey ho, there you go. Assets Capital sent out a quarterly update. I would say that a good summary of Assets Capital would be that they're not your favorite platform. I have been able to get some money out of there. As you know, you can withdraw every few months or every few weeks without a fee. People are not a big fan of the fee, the withdrawal fee, but they do give you a freebie sometimes. This is the update for 2025 quarterly update sent out in October. Withdrawing cash from the platform. We'll just go through this very quickly. Please confirm we've continued to deliver distributions now up to £90 million, including £7 million distributed during the quarter of up to the quarter of October 1st, 2025. So that's good news, right? Anytime you see positive money going out to the investors and the lenders, that's good. No new loan investments are coming onto the platform. So they ask that all investors take steps to withdraw all funds held in their cash accounts in a timely manner. They're talking to you. Get your money out if it's sat in there. Okay. There is, remember, August 18th of 2025, you are transferring out your ISA. There's a new fee of £35. Of course, if you don't want to keep it in the ISA wrapper, you can withdraw for free. It's going to cost you 35 smackaroonies to get your IFISA out. Loan portfolio update. Of course, they closed their doors to retail lending during the time between March 2013 and December, when they closed their doors to retail lending in 2022, that they facilitated 1,244 loans with a loan capital advance of £1 billion UK pounds. As of the end of October of 2025, 1,127 loans have been repaid, representing a loan capital of £972 million. This is 90.59% by number. But what are we talking about? They're talking about colored segments now. They have a pie chart. Let's look at this. It's a very blurry pie chart. It's kind of hard to see. So red is irrecoverable, right? 3.14% of loans irrecoverable. So as a percentage, that's pretty good. Total loan book. Let's see what these two different numbers represent. So this is the number in pounds. We've got 14.3 million pounds of irrecoverable loans. And so this dark blue little section in there is number awaiting PF review. Purple segment, 9 loans of an outstanding loan capital of 7.83 million to be listed on the irrecoverable loan tab. That are considered irrecoverable. That's purple. I thought that was red. I don't know why they're saying purple. Am I reading that incorrectly? No further loan capital will be recovered, but there may be a discretionary provisionary fund payment at the end of the loan book runoff. So you may get some money back, but I thought that was interesting. So green segment of the loans that have been doing well. Blue segment shows 69 loans with an outstanding loan capital of 45.9 million. Those are the loans that are still running. They form the remainder of the loan book runoff shown in the portfolio table. Question is, will those loans in the blue slice get paid off? Will they run into trouble? We'll see. At the end of the retail loan book runoff, the discretionary provision fund may make payments in respect of eligible loans that have not already had a provision fund payment. So you may get a little bonus at the end. November 2025 onwards, the retail loan book commenced on the runoff commenced 15th of December 2022. So imagine that it's been 3 years. Doesn't time fly? 220 of the repaid loans referred to above have repaid during the runoff, and a further 10 in the past quarter. In relation to non-development loans such as commercial mortgages, the number of loans has continued to reduce through redemptions, mainly as a result of refinance via another lender. In non-defaulted loans, the majority of borrowers continue to make their monthly loan payments, but there is a minority of late payers and arrears which has been managed more closely. So, if we look at the list right here, we've got monitoring the number of loans, right? So 69 loans in the portfolio runoff, 36 normal for £25 million, 4 that are monitoring, so that's 2.18, so that's 10%. Those are loans that have a possibility that they'll go into default. Then we got monitoring with a credit event 1 loan, so that's likely headed to the red zone, and then 28 in default. So, if you look at things as a total of how much has been loaned versus how much is in trouble, yeah, it's not terrible, but I think people do get a little antsy about it, and they, of course, would like to get their money back as a lender. But we shall see. 12 loans with an outstanding loan capital of $7.8 million are in secondary status, such as pursuing guarantors either before or in litigation or awaiting any dividend outcome from bankruptcies and liquidations. Some loan capital may be recovered subject to circumstances of individual loans. And as loans become repaid, they move into that green segment of the pie chart. It's complicated, right? Running off a loan book, peer-to-peer loan book is very complicated, but you just have to be patient. I think it's going to probably take another 3 years for this to get wrapped up. And then at the end of it, you'll see, what were the damages to your investment. Hopefully, though, won't be too bad. For example, my funding secure ended up being okay, even though it looked pretty dire at the time. Let me mute this. Sorry, 1 second. Yeah, so we'll see. I do like the fact they do at least send out an update, which is nice, and it is quite in-depth. Lender fees. So we are looking at 0 lender fees after 2024 December. And we all paid an average fee level of 3.52% for the first 12 months and a 5-year average fee of 0.88% per annum. We are pleased concerned this lender fee plan is unchanged. As things stand, we have ceased charging the lender fee from January 1st, 2025. But it says, please bear in mind that previously charged fees that have not been able to be collected due to borrower not making loan payments will be collected if the borrower starts making payments again in the future. So they're going to take out any fees that assets is owed to them. Let's see what else here. They talk about the ICE transfer fee, that they've looked at that, and looks like that's going to be stay at £35. Yeah, I think that's most of the important information. If you are a assets capital investor, you will have gotten that. You could take a look at that. But you just hope that they get the rest of the loans wound down. Maybe the borrowers refinance them, and we all just get the heck out of that nightmare as quickly as possible, right? And also, here we have a funding secure Joint Administrators Progress Report. This again is from the period of 23rd of April 2025 to the 22nd of October 2025. It's pretty in-depth. We'll go to the main stake parts, the juicy parts, the parts you care about. Look at this. Administrators' legal costs $116,637. Administrative fees $45,600, and administrators' disbursements £439. Let's see what this is. JCS. Let me just read what this is. Realization of assets. I go start there. During the period, total gross loan realizations amounting to just over £3 million. These funds relate to previously completed loans that were not transferred into the bank account the day after the previous reporting period. To date, total gross loan realizations amount to £54 million and a little bit of change. In this section, the following expressions is defined as set out below. Further detail to this is the JCR Star Holdings situation. There was a trust account. I think funds were being held there. We had somebody representing the investors, Mr. Mundy, who went to court. Then there was a release of these funds. So total costs together with the settlement settlement sum were £538,391. Yeah, sometimes these reports can get a little dry, but just remember too, if you haven't checked on your account, go log in because you may have money, right? There's all kinds of information in here. During the period, investors' withdrawals have amounted to £4 million. Total investor withdrawals amount to £38.3 million. Gross interest. During the period, gross interest amounted to £64,941. Total gross cumulative interest, $666,000. Yawn. Okay. Yeah, it's again. Here's an interesting. We've received claims totaling £879,000 from 21 creditors, and they're still waiting to receive claims from 21 creditors whose debts total $150,000. So what can we take from this report? Well, more fees from the administrator. They just keep racking up as they will. There's nothing you can do about it. You just have to be patient. You just wait and see what happens. I think a lot of these frozen funds have been already paid out too, that they write on here. Yeah, anyway, we'll check in another quarter and see what's going on. Fourthway has a really good article. Shout out to Neil. If you didn't watch the live stream that Neil and I did from Fourthway, go check it out. It's on the channel. Somo is now taking on a first loss on most loans. He has a really good article about it. He kind of breaks down how that first loss works. So if you're interested in that, go check that out. They're saying that Somo loosely projects they'll reach £40 million of second charge lending from 1st of November 2025 through 2026. That would equate to 200 loans, about $200,000 each. It's interesting. So the first loss protection would be, I think, 1.2 million on that, which is okay. That's good. Somo will hold a cash reserve with a value that's at least 0.1% of the loan amounts covered by the guarantee. That means it will be holding £40,000 when the second charge loan reaches a total outstanding amount of £40 million. $40,000 is just 3.3% of Somo's maximum liability of $1.2 million. In other words, the guarantee is largely unfunded. However, Somo puts a lot of cash of its own each month. Somo pulls in a lot of cash that's highly profitable. So while it's saying, Somo, that it will cover a maximum liability of £1.2 million, there is only going to be about £40,000 of liquid cash available to cover those first losses. So we'll see. How useful is the guarantee? This is a good piece of information. No lender has lost any money on a Somo loan. Indeed, lenders have only lost a negligible amount of interest on its worst performing loans, barely denting returns. The guarantee takes the edge off the additional risk in any loan Somo approves a new 75% loan to value. Really, the main benefit of the guarantee is it provides you with reassurance by putting skin in the game. The reassurance might help you feel more comfortable. Here's the thing, though. Honestly, if the money's not there, I mean, guarantees are only as good as the liquid cash available. So if Somo, for some reason, runs into trouble, they're not going to cover the 1.2 million if they don't have it. So 40 grand doesn't really cover much out of the 1.2 million that they are expecting as that they would, their cap of liability. It's kind of like LoanPad. They have a very small fund, like a provision fund. About, is it like 40,000, something like that? It's small. What you hope is that the company doesn't go into problems and doesn't run into trouble, because if it does, those guarantees, there's no. First of all, I don't like the word guarantee because there's no real guarantee that money would be available to cover. But all that Fourth Way does is they look at the numbers and break it down and say, what's the likelihood that the guarantee would be there and it would work if the company ran into trouble or the loans ran into trouble. So anyway, go check out that article. It's on Fourth Way's website, called Someone Taking First Loss on Most Loans. It's good article. I think he really sums up that proposition. Let's move on. Here we go. Relendex, of course, was the UK development property developer. Let me drink something. I am a little bit out today. UK property development lender of the year. They are happy. They are delighted. This is the 4th year running they have gotten this recognition. So congratulations to them. You got to tip your hat because 4 years running. That's good. So well done, Paul Sonabend and the Relendex team. Okay, let's look at Crowd Property. They have a new platform. They have a new UI. This has completely been absolutely changed. Let's see if I can still. Yeah, there's some things I was poking around it a little bit. There's a couple of things I like. I like the new user interface. I think it's a lot more modern. And one of my biggest complaints was that the old user interface was clunky. It was a little bit complicated. And I think it's a lot better now. There's some things that I'm still would like to see. For example, if you're on the dashboard and you're looking at your total portfolio, by the way, I've been drawing down on this portfolio. As you can see, I have a very small balance there now. But I can't click on my portfolio, right? In fact, none of these boxes are clickable boxes. I would like, if I click on my total portfolio, I want to see what loans I had. The old UI used to tell me what the status of the loans were, what I was invested in. I know it exists on the website, but I think it would be nice to be able to click on these and get to more information, but you can't. So that's more of a snapshot. Question is, if you go to find your portfolio, where do you find it? So maybe I click on projects. I see funded projects here and I see paid back. That's nice. If I want to load more, I can do that. And then click on there. It gives you all those details. I think this looks a lot better. So that is very positive. Let me see here. Investment history. Okay, so in order to find my portfolio now, it is under investment history, which is an interesting way to title that. But this is what I have left in my portfolio. And here is where it gives you the status of the loan. So it's no longer under a portfolio, it's under investment history. And if I click to sort it, I can see now what is live, what has been partially repaid. It doesn't tell me which loans are in trouble, whereas before it would tell me how many of my loans are past due and how many are in good standing. It does not, as far as I could tell, it doesn't tell me that at all. I'm presuming if I go on, this is, by the way, from my auto invest. Yeah. Does it tell me where, if there's any problems with the loan? I don't know. It's certainly not easy to find, but so everything is under investment history for your portfolio now. But in general, yeah, I think it looks a lot better. I'm sure they'll continue to make improvements as feedback is received. I would definitely encourage you to, if you are a crowd property investor, send feedback. Tell them what you like and don't like. I think there's some positives there. I think there's some work to be done, but in general, the user interface looks a lot nicer, a lot more modern, a lot more cleaner. But some of the statistics are really lacking, I think, now. Why do they not have a statistics tab over here that you could look at and see what the heck is going on with all the loans? Maybe it exists. If it does, you tell me, because I have not been able to find it. But yeah, I think it's a step in the right direction. You know, talking about peer-to-peer lending sort of hibernating, I found this interesting thread on the peer-to-peer independent forum saying, fresh funds for peer-to-peer lending. The original thread was by Jester. No question, peer-to-peer has had a checkered past, lost out badly on lending and money thing, doing better on unbolted, etc. But knowing all we know now, is there any way you would allocate fresh funds to? I'm not intending to put any more in LoanPad. I'm adding to Capital Rise, Capital Stackers. So some people adding, running down some platforms. That's the general consensus, but really not much of it, just not much activity on this thread, which again leads me to think peer-to-peer is just hibernating right now. Even if I go to the last message here, which is from Jester on November 14th, 2025, so a little more than a week again. A week ago, our friend Chimpo Naughty asked, how's your peer-to-peer portfolio? Did you add a new platform? And Jester said, no, I didn't add another platform. Struggling to find any decent auto-invest options where limits aren't too high for me. My peer-to-peer portfolio is now limited. Instead, I added to Unbolted and LoanPad and also used Cufflink and Elfin, winding down Abundance, Crowd Property, and Assets. So I think, general consensus, right, from people is not really adding new testing platforms, new platforms they haven't used before, just maybe adding some money to the ones that they trust. That's what I have done in the past. And I think that's a good litmus test of the state of the industry right now and whether people are willing to take a risk. And one of the emails that I got from the mailbag kind of was along the lines of this topic. Let me find it. Hold on. I think this is a good email. This is a good email. From Dave. Everybody knows a man named Dave. Hello, Lawrence. I stumbled upon your YouTube videos recently. I'm thinking about putting some money into peer-to-peer lending for the first time. So Dave is a newbie. I'm looking for a stable investment where I can maintain the principal amount and collect some interest. My question is about diversification. My first instinct is to pick two solid companies and invest £10,000 into loans. I notice you're a fan of diversification. I've been buying equities, so shares, stocks and shares, for a long time and have tended just to buy 2 or 3 companies and have done well this way. I found diluting investments doesn't provide the best returns. Why wouldn't I just pick the 2 peer-to-peer companies I feel are most competent and provide best returns rather than spreading the money out? Thanks for any input you can provide. Well, Dave, thank you for the message. And I did clear it with Dave that it was okay to post this on the stream. So if you ever want to send in a question, you can do so, and I will check with you if it's going to go up on the stream. So Jester here makes an interesting point about, I didn't add another platform, but if you look at his portfolios, he's got 1, 2, 3, 4, 5, 6, 7, right? 7 total, adding to 4. and winding down onto 3. But the very first message that he posted, I lost out badly on Lendy and money thing, suffered hugely on abundance, assets to be decided. So he's had 2 really bad losses financially, Lendy, money thing. Myself, I've had some pretty bad losses on collateral and Lendy and money thing probably. So there's 3. So in answer to your question, Dave, if you have been in this area for a while, which you haven't because you're a new guy looking to invest, you should probably do some historical research on what happened to some of the companies that failed. That we thought we saw those juicy 12% returns, and we thought, oh yeah, how easy is this? We just put money into these platforms and lend the money out. We're going to get 10%, 12% a year, doing absolutely nothing. We just put the money in, we sit back, drink a cup of tea, get interest every month, use the secondary market, use other people as exit liquidity. What could be better? Well, of course, then the company's folded. So the answer to diversification is because you are putting a stop loss on the worst thing that happens, which is either the peer-to-peer lending company goes out of business and takes your money down with it, or the loans you invest in, if you're picking out your own loans, you seem to like to do that with your stocks. So I'm imagining maybe you want to do manual investing. If you pick out a couple of loans and one goes bad, it's going to take you a long time to recover in interest the money that you've lost. Let me show you what that looks like. Mr. Chat GPT is going to help us, and I wanted to give sort of an example of how damaging it can be if a peer-to-peer company does go out of business. Let's say you have £10,000 to invest and you pick out 2 companies. Let's say you were unlucky enough to pick out collateral at 12%, and then you picked out, say, a 7% returning platform, something like, House Martin, maybe Lend Invest. And you lose half of your money to the company that went out of business, and the other one is still active. So now you've lost 5,000, right? Now you got 5,000 left. So if you put in 1,000, you were expecting to get 7% back. So I put it in ChatGPT and I said, Mr. ChatGPT, if I invest 10,000 at 7% annual return, compounding interest monthly, how long will it take to earn £5,000? Now I actually need to change this to 5,000 because if you originally had 10,000, you lost half of it on a company that went out of business. You need to know how long it's going to take you to make back all of that money that you've lost. So let's see what it says. This is why ChatGPT is good. It's going to tell us this easily. I don't want to have to calculate this. Check this out. Final answer, 9.9 years. So if you invest 10,000, you lose 5,000, and you get 7% on the remaining 5,000, it's going to take you 10 years to recuperate that loss. That's a long time. So a lot of OGers who are invested in peer-to-peer lending who took hits like I did and lost substantial amounts on companies that went out of business, it's going to take us years to recoup that through other means, right? Through the other peer-to-peer lending companies. Now, why you diversify, the right thing to do is to take that 10 grand and probably invest it through 5 companies. And the results are a little less damaging, right? So if I change this ChatGPT prompt to, let's do it again. So if I invest £5,000 at 7% annual return, so let's say I invest in 5 companies, £2,000 each, and one of them goes out of business. So now I've got 8,000 left, and now I only have to recuperate 2,000. Again, this is worst case scenario. Do I expect that more peer-to-peer lending companies are going to go the way of collateral? I really don't. It's possible, but I'm just not seeing it now at the moment. But it could happen. You always have to think about worst case scenarios. So let's see how long it's going to take me with my remaining 8,000. If one of those 5 goes out of business, how long is it going to take me to earn 2,000 back? It's going to take me 3.2 years. So that sounds a lot better than 10. Neither scenario is good, right? One of those 5 going out of business is bad. But if it does happen, it's going to take you 3.2 years to get your lost £2,000 back by getting 7% on your remaining 8,000. So if you diversify even more, and now you've got you're investing your 10,000 over 8 companies, the loss becomes a lot more palatable. Now you're only talking maybe 1.5 years to get your lost amount back in interest. So really, I mean, that's diversification in its simplistic form. You're protecting against the downside that something fails. Kind of like with Dave's stock picking, right? If he picks out 3 shares, companies, and one of them goes to zero, he's going to have to get some really great stellar returns from the other 2 shares that he owns, the other 2 stocks, to make up for that loss. So I would have thought, somebody who invests in equities would understand that idea. Certainly people who invest in index tracker funds understand the power of diversification. And I know people that have taken losses in peer-to-peer lending certainly understand that. So I hope that answers your question, Mr. Dave. It's been a really crappy couple of weeks in the stock market. I'm going to show you the trading 212 portfolio so you can point at me and say, haha, I told you so. My trades have talk about bad timing, right? I mean, God, I sold out of the index tracker fund that was inside this portfolio because the stock market was raging on, and I thought, you know what? I got this diversified piece in here. There was, I think, about 3 or 4 grand in there, maybe more, 8 grand maybe at one point. And I sold out the worst time. Invested into equities, invested into some stocks that seemed to be doing really well. It wasn't very well thought out. And, of course, just a few weeks later, we had this nasty reversal in the stock market, and the Trading 212 account got punished for it. At times like this is the times where investing in index trackers makes so much sense. Because if you're stock picking, you have to be able to stomach these downturns. And to be honest with you, the downturn hasn't really been that bad. It's just been bad towards certain stocks and shares, and some of these I have in the portfolio. So let me show you what is going on in the portfolio. It's been a little bit stomach churning, I'm not going to lie. Right? Let's see if this will pull up. Did you log me out, Trading 212? You did. Look at that. 24,386. 387 pounds. Remember, we were eclipsing 31,000 just not too long ago. So a 7,000 pound swing, so 30%. We are now, for the 1 year, minus 13.5%. Our 1 month return, minus 11%. 1 week, 6.3%. 3 months, 13.4%. So overall, of course, the portfolio has done really well, up 308%. But it has been rocky over the last couple of weeks. I'll show you what is going on. Punished here by strategy, which has absolutely had a horrible time, was as high as for $433 US, now down to 172. How about that? 59% down. The portfolio down 47% on that, so 3,400 pounds. Yeah, Amazon. Amazon has been doing okay. Amazon has been holding up pretty well. You could certainly get some discounts back in March and April on that stock, so that one was okay. So 20%, we were in the green on that. And NVIDIA, of course, because this was purchased so long ago, been able to ride out the volatility. This is just in the last month. You can see gone from 209 down to 180. So on sale, if you have the stomach for the volatility, which I think I do, and I feel like NVIDIA is a company I would just leave money in, so that's okay. That's done well, 82%. But then we look to some of the red down at the bottom I'll get to in a second. Tesla up 8%. So again, that was timing, happened to get in at a good point before all this volatility. And now we look to the stocks that people have been talking about on the internet that I was getting fancy with. Iron, 20% down. People are saying this presents an opportunity. I'm not convinced. I don't know what's going to happen. I think everything right now is getting punished. Nebius, with this all AI computing, cloud storage, stuff like that. It's the latest rage on the internet. 30% down on that one. Photronics down 12%. Cipher Mining down 23%. And Rocket Lab Corporation down 35%. So as we were talking about diversification, right, kind of key here, because if all the money had gone into Photronics, we'd only be down 12%. If we'd have taken, just had one share here instead of all these different ones, we put it into one, all that money, which is about 3, 4, 5, would have been close to 10 grand. We'd certainly be in better shape to have it in Photronic. But if we'd have put it into MicroStrategy, all of it, or Rocket Lab, we'd be down a lot more. So the problem is you just don't know which one is going to do well, right? And these stocks have done well. I mean, if you let's look at Iron, for example. Look at that 3-month, look at the 1-year chart right here. This was the time to buy. Who knew though, right? At $5. And it's certainly done well over 3 months, but of course you get in right here like I did, not a good spot. We got in at $54, so right here. Of course, bad timing. So it shows the power of diversification. Also, kind of sticking to your guns. My strategy has always been S&P 500, right? Or Vanguard. Go like here. Let's see how much this has gotten punished. Well, low of 96 pounds. So this was 100 and now it's at 96 pounds. So there you go. Really not much of a pullback at all. That's the power of the index, right? The index investing. You're not going to make 60% in a year, but you're also not going to get punished when things start to really downturn, as you would with something like Rocket Labs. You're not going to get this huge run up from 15 to 60, right? But you're also not going to get these huge drops from 60 down to 40 in a period of just less than a month. This is the I sleep well at night play right here. This is the I sleep well. You put money in, you go to sleep, you wake up in 20 years, you've done better. You're going to do fine, right? This is the chart. These other stocks are I feel like I want some adrenaline rush. I feel like I'm going to gamble some, and I'm trying to score some hits, right? And that's just not the responsible way of investing. It's very, very risky. You've seen it here on the portfolio. The stocks and shares God do not want us to give money for profit this year to charity, because that's what I do. Actually, and that's okay though. I already made a donation from the portfolio to charity when it was up. I didn't wait till the end of the year, so lucky for charity. Forest Home and Dr. Paula Skincare, they got their donation before the market tanked, so at least we were able to pull some money out. Here is the question that I got about fear this week, and when markets are kind of being volatile, these are the types of emails you see floating about and types of things on Twitter, the posts like, the sky is falling, everything is disastrous. Hi, Lawrence. I started investing in shares for the first time 4 months ago. I seem to have the worst timing as everything is dropping. It took me a long time to have enough courage to invest in the first place, and now I just feel terrible about losing money. How do you overcome the mental anguish investing? I know you've been doing it for a long time. Can you give me some words of encouragement? Thanks so much. Ollie, 26 years old. Yeah. Well, first of all, I don't know what you've been investing in. If you've been buying the same stuff that I have in the portfolio that's been losing, then yes, you're going to have anguish. But if you go to a chart of let's see, let's look at the S&P 500. Let's take off this. I don't know why this has come up as chevron. Let's look at the S&P, the SPX. All you need to do is go to a chart like this. You could look at even just the 5-year. Look at this circle. I don't know what that's all about. Just go back and look at history. This is how you invest smartly. You put it in an index fund, an index tracker, and you do nothing. And then you look at the chart. And this is where we are right here in the corner at the top right. This is our big pullback. Doesn't that big pullback look relatively tiny? Aren't we just a couple of 100 points off our all-time high? That's not scary. You shouldn't have any fears investing when you look at a chart like this, right? And another cool thing is you can always look at the highs, right? Let me get my highlighter out here. I'm going to show you some things. You can always look at the highs. For example, we look at this high right here. You see, I'm making a little pink circle. We get a high and then we drop back down. We drop back down. We come down here to the low. The cool thing is these highs are always going to get surpassed. Is there any guarantee in life? No. There's not a 100% guarantee, but you can pretty damn sure that this high back here from January or December of 2021, we had a high of 4,727. Even though we dropped back down, that high was going to always be surpassed at some point. Now, it took a couple of years, but eventually that high went higher and higher and higher. And then we hit this other peak right here in the 6,000 range, and then we dropped again. And again, that high was realized 6 months later. Now we have another high up here. This is the all-time historic high. And even if the markets drop all the way back down here, you know that this high is achievable again. And if we look back through history of the S&P 500, every single high has always been back. It's always been surpassed. And it may take some time. If you're the worst timer in the world and you got in right here, 2000 when we had the dot-com bubble, it took 8 years for it to come back. That's if you would put all your money in at the worst possible time. But you can see that high was surpassed again. That high right here was surpassed. This high surpassed. This high surpassed. These highs right here surpassed. So I think that's the best thing you can do is just, when they say, when in doubt, zoom out. Just go look at the chart and know historically that likely those highs will be surpassed. It may take a while, but you keep investing through the highs and the lows and don't look back. The worst thing you can do is sell. Like in this portfolio, the worst thing I could do right now, unless I wanted a tax write-off, which I may well do at the end of the year. I don't know. It depends how much I owe. But I may sell all of these shares that are in the red and rebuy them. Take the tax write-off of this lost money. That, by the way, is called tax loss harvesting, which is completely illegal. You can sell your losses before the end of the tax year and then rebuy the shares. There could be some rules. Sometimes there's some rules about how long you have to wait, but check into that, not tax advice. But you can rebuy the shares and take the tax write-off. But certainly the best thing to do is I think you just go with the safe route. And you even, I've dabbled in some high-paying dividend stocks too, and the problem is when they get hit by these downturn markets, the dividends just don't make up for the losses that you get on the price erosion of the stock. So I hope that helps out. Let's take a quick look at the Bitcoin price. Now, what you say crash, maybe to others is an opportunity. We've had a massive drawdown here. Again, with the volatility of the stock markets creating problems, of course, for Bitcoin. But this is an opportunity to buy cheaper prices. People are always saying, well, 124,000, I don't want to buy Bitcoin. It's too expensive. Well, now look at this, 84,000. This is nothing new to people that have been in Bitcoin for a long time. We see volatile times. And again, the all-time high has always been surpassed. And I think it's just like the S&P 500. Some people may disagree, but that's my personal thoughts on it. I got an interesting email. Somebody named Barry who thinks that I should absolutely. Oh God, it's funny. Sometimes I get these emails, right? And I usually don't post the bad ones because I don't know. I don't even know if I should be highlighting such a thing. But anyway, he basically said that I should pull all my money out. Well, I still can because it's going to zero. Blah, 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 blah. Anyway, in order for Bitcoin to go back to zero, that would be crazy. I don't know if it would. It could, absolutely. But yeah, do your own research, right? It's about what you're comfortable investing in. Oh dear, so I don't know. But yeah, thanks anyways, Barry. Thank you, Barry. Thank you for that email. It makes me laugh sometimes. I like the good and the bad emails. Sometimes I'll put up a bad. I do get some funny emails like that, kind of hate things saying, "Oh, you're wrong." And I say, "Yeah, I don't care what you invest in. I just give you information and you put your money where you feel comfortable." I hope we all win. That's what I think. I hope Barry does well. I hope you do well. I hope you don't lose money. I hope you don't invest in another Landy. I hope none of us do. I hope you buy a stock that goes up 100x. That's my hope. I posted a picture that I saw in New York last year that said, it was something to the effect of, "I don't want to see you lose. I hope we all win. I hope we all make it. I have no interest in beating you. I hope we all make it." I think that's the right way to look at things. Anyways, I think that's going to do it. We've been going for an hour. I'll see if you have any interesting comments. Hit that thumbs up if you can. Happy birthday, Harley. Thank you. I'll tell. Happy birthday, little dog. She doesn't even know it's her birthday. It's funny. Let's have a look here. Dave says, "I think there is still some worth in P2P. You have to be very careful." Yep, true. Property currently in the UK is struggling. Affordability in the up-and-coming budget are slowing purchases and sales. Cufflink has not had a new loan for a couple of weeks. Interesting. Lawrence, have you looked into what the situation is in Landlord Invest you were going to? No, I didn't. Sorry, I totally forgot. Stay tuned. Capital, I will look into that. I'm going to write it down. Let me write it down right now. Hang on. Because I'm going to forget. Philip, Mr. Philip. Maybe I'll reach out to Philip and see if he wants to come on the stream. Cufflink have had Proplin's been solid. Cufflink had a few new loans, but they've all been placed in the auto pool to consume return cash from completed loans. There. Interesting. Unbolted has been pretty good. Yeah. Hey, listen, I think that's a good piece of advice. You don't have to reinvest your interest. So every time you withdraw interest, you're reducing your risk a little bit. Take out your interest, you could leave your capital in there. I did think about pulling out of Cufflink, but just having my ISA in there deters me. Somo have been very good for me, 11% XIRR over 5 years now. Cool. That's good. Good comments. Good discussions. Dave Dawson, I think now is a good time for Bitcoin. Yeah. I mean, again, opportunities, right? As Warren Buffett said, you make money when people are fearful, not when they're greedy. And I thought to myself, I was thinking, man, this stock market run up, would it be the right time just to liquidate? But that would be timing the market, and I'm terrible at timing because I wouldn't know when to get back in. So, yeah, there is a UK fund too that you can buy. It's IB1T, I think it is. It's down 30 to 23% for the last 3 months. So you want to get some exposure to Bitcoin. You don't want to own the actual Bitcoin. I'll show you. Let's look. Right here, iShares, Bitcoin. Look at that, 23% down. You can get a 23% discount. Liquid. So IB1T. If you want to get some exposure, you can do it that way. Okay, well, that is going to do it. I will see you next time, everybody. Thanks for tuning in. I hope you have a good weekend. Enjoy the fresh, brisk weather. And that's all I got for you. Take care. Hope you enjoyed the stream. Subscribe. Thanks. Bye.